closer to 70K after a months-long downtrend after the ETFs. Let's talk what's next for the crypto market. Joining us, Greg Taylor is a CIO and portfolio manager at Purpose Investments, one of the first Bitcoin ETFs out of the gate, though not traded here on our platform. That's all right. Greg, thanks for being on the show.
Yeah, thanks for having me.
So when you look at across crypto right now, Bitcoin trying to make moves, it seems like we've had a little trouble getting through the 70 level, been kind of months of a downward grind. Is this a reversal of fortune?
Well, it could be, and you're right. Everyone's looking at that 70,000 level and seeing if this is the time we can break above it and where we can go from there. And November's been seasonally one of the better months for Bitcoin as an existence. So everything seems to be lining up. And when you look at kind of this everything rally that's going on in the market with stocks going up, with gold going up, everyone seems to be making money, and it feels like Bitcoin should be joining the party. It really, for an asset that's got a reputation for a lot of volatility, it hasn't done that much in the last few months. It's kind of gone choppy in this range. So it's nice to see it having a move, and as gold's breaking out, this is now maybe the time for the digital gold asset to follow along.
Your guys' Bitcoin ETF was one of the first, and I believe the first physically settled by Bitcoin, right, on the Toronto exchange. And you guys have an ETH version as well. How have those fared since the U.S. funds launched as well? What kind of trade-off are you seeing? What type of customer base?
Yeah, so we were the world's first physically backed Bitcoin ETF that launched a little over 3 years ago. You're right, trading on the Toronto Stock Exchange. And I think it was good for the industry to get this going. And we welcome that the American market is now opened up and having US spot Bitcoin ETFs, because it opens up the whole asset class to the biggest investor base in the world, which is the US retail investor. And institutions had been looking at crypto in the margin, and we dealt with them when we were the only game in town, and a lot of hedge funds were there. But now it's great to see that the adoption's widening out, and we're seeing more retail investors get involved. More traditional asset managers are starting to put crypto into multi-asset funds, and I think this is great for both Bitcoin and Ethereum in the long term. And I also think we welcome the regulation, because having the U.S. regulators involved in looking at this is great for the system, because there had been some bad actors, and we all know the stories that have gone on and crises that have caused in crypto. But having more regulation, having more institutional investors involved in the sector, I think helps to make it a more legitimate asset class.
You've recently written about an everything rally, a phrase I like to use too when we see cross-asset gains. There have certainly been moments where it's very obvious we're in everything rallies, COVID being the most extreme, obvious example. But we have seen markets be a bit more discerning in terms of leadership these last 8 months. If Bitcoin breaks out, if gold breaks out, does that start to look like an everything rally? How do you define it?
Well, I think it's kind of everything's working right now. We've got globally a rate easing cycle with the U.S. central banks kicking off the 50 basis points, joining other central banks who have been cutting for the last few months. We've got stimulus in China going, and then now we've got U.S. earnings coming on and kicking off with really strong earnings out of the banks. So I think a lot of people had been sitting on the sidelines, having too much cash, lagging the market, and now as things are all breaking up and to the left, I think people are saying, I got to buy this market. And we're seeing a lot of people are saying, didn't want to buy until the election, but now the pain trade is higher and people are coming in. So it does feel that things are going well, and you have to wonder if things are going too well, if that's a problem. But so far, it feels like that cash is coming off the sidelines and coming back to the equity markets, and it feels like this is a great setup for Bitcoin to have a good move into year end.
There's quite a bit of talk about what might happen if the next administration is more friendly to crypto. We saw former President Trump speak at the Bitcoin conference earlier this year. There were some ideas floated about a Bitcoin strategic reserve. Do you think the price of Bitcoin needs to see the government as a buyer as the next kind of step for prices?
Well, I think it certainly was trading a little bit in the Trump trade. Certainly, we were looking at Bitcoin, and the banks and other parts of the market were in that Trump winning basket, and it seemed to trade in a correlation as the odds for a Trump presidency increased. We saw some moves in Bitcoin, and some are saying that's part of the reason for the move higher this week. But I think regardless, Harris has not been that negative on crypto in general, and it feels like the momentum behind crypto is there. Then the younger generation definitely wants to look an alternative and real assets. And I think there's some disenchantment with what central banks have done and how much money printing's gone on in the system. So I think the case to be made for crypto in general is there, regardless of who wins the election. And it might have a more immediate move if Trump wins the election. But I think both scenarios are showing that the momentum's there, and having the Bitcoin ETFs, that having it more into wider audiences is only going to help that.
All right. Understood. Thanks, Greg. Appreciate the thought.